everybody. Grady Polcyn here, Family First Life America. Standing here with Julius Gilgur, who is our platinum producer who last month issue paid over $38,000 here at Family First Life. That's issue paid, not submit. Client paid, got paid. So what we're going to do right real quick is Julius is an excellent producer. I sell a little bit of insurance myself, and what I want Julius to really focus on, talk about some objections. So we sit in a lot of homes with clients. Here at FFL, we book appointments 20 plus a week, so we're seeing a lot of people. We've got a lot of chances to protect families, to put policies in place. We also do run across a lot of objections, and so we're going to talk about the four main objections that we often run across, how we address them, and how we overcome them. And so the first one, Julius, I want to tell you who you are here in four seconds here, but we're going to talk about think about it. Now, I need to think about it, Julius.
Okay. So first off, guys, welcome. It's an honor to be here with you guys and share some of the things that I've learned from Grady Polcyn and some of the other amazing producers here at Family First Life. But when you get someone that says to you, hey, I want to think about it, the approach that I use and that many of us use here at Family First Life is, Bob and Mary, I understand you want to take some time to think about it, but in our experience, typically people want to think about it because they want to make sure that the price is right for them. Is that correct for you? You get them to agree with you, right? Because 9 out of 10 times it's all about finances, right? They want to make sure that they can afford it. Mm-hmm. They want to make sure that they can fit it into their budget. And so when you get them to agree, right away you've identified the situation almost every time, right? Once you identify the situation, then from there I go, hey, Bob, Mary, I completely understand. I want to make sure, like I told you in the beginning, my job is to make sure that we find something for you, number one, that's comfortable, but number two, actually fits into your budget, right? And so right now, while you want to think about it, do you think about a few days to a week is enough time for you, Bob?
Sure.
Yeah, most people will say within a week is enough time. And so then you got to really lean on the carriers, because at the end of the day, we are field underwriters, guys, and you got to remember, we don't make the decisions. We know more than likely what could happen based on what their medications are and the situation they're in. But at the end of the day, we don't know. Sometimes there are surprises, things in their medical reports we just are not aware of. And so you got to play the takeaway card and say, listen, Bob, I can respect that and I understand where you're coming from, and I want to give you that time to really think about the right amount of coverage and what makes sense for you. But right now, the company is the one that really needs to think about it to see if they're going to take you on as a client. And so what we do is we submit an application. It takes about a week to 2 weeks to determine if they're going to approve you. At that time, Bob, I'm going to give you a call back and let you know if you're approved, if you're not approved. By then, if you are approved, you'd have enough time to think about the amount of coverage that you want, and then you can determine what makes sense for you. Is that fair?
Sure. Yeah.
And okay. Most of the time, that's really all it takes. It's really about money, right? When you really narrow it down to think about it. If they don't tell you, or if you ask them a question and you say, is it about finances, and they say no, then you really just got to lead in with another question to figure out the why. Because the why is really going to tell you what it is, but most of the time it's finances, guys, because you have to remember we're sitting in their home because they requested information, right? Correct. So there is already a need because they've expressed the need or expressed the request, and so we're in their home because they've taken an action. And so it's not a matter of if they want it, it's a matter of how much of it do they want, more Correct. Often than not.
Yeah.
Okay?
That's good. Very good. A couple things just to comment on that was excellent. I learned from a mentor, he said, when you're talking to the clients, say, understand, Bob and Mary, you're juggling a lot of balls right now. You got some things going on, but you got to understand, if we don't take care of this life insurance ball, all those other balls fall on the ground if something happens. Another thing too is like I'm just a field underwriter. I'm just a field underwriter. I would approve everybody, but they don't give me that power. Yeah. So what we do is what most people do. That's a key line there when we're selling. What most people do. Everybody wants to follow the crowd. Herd mentality. I learned from another mentor. So what most people do, Bob and Mary, is they would put in an application and find out if they can get approved, and then we can decide which of these numbers fits your budget most. And a lot of times it's just like this tactic, this smoke screen they're throwing up because, hey, you called them yesterday. They filled out a form. You called them yesterday. You're in their home today, and now you want to now they're going to apply for something. It's just a lot. It's a lot fast. And so what generally we see is Once you can get them over the hump to say, yeah, I'd like to apply, that makes sense, let's put in a request for coverage. Now you're continuing to build rapport throughout that entire application process, which really then they're like, yeah, I'm on board with this, let's find out if I can get you approved. You're telling about the benefits inside the product. I have them list out I personally have people list out as many beneficiaries as possible to make the policy feel more real, right? And so those little elements of selling and being a part of that overcoming the think about it thing is just a lot of times is unanswered questions. And so, Awesome, Julius. So, number 2, I got a policy through work. Okay. I got a group policy, or I got a work policy. I got plenty of coverage at my job.
Yeah, and this one's pretty common, guys, because as you guys know, corporate America, or many companies in corporate America, they provide a life insurance benefit. And so this one I like to really kind of kill off before we even get into the nuts and bolts of what we're going to present. And the way I do that is, as you're going through the client financial inventory or client suitability, whatever you want to call it, one of the questions that we ask is, do you have life insurance already? And many times people are going to say yes when they have a group and work policy. And is that an actual life insurance policy? Yes. But does it work different than a private policy? Absolutely. And so it's really key to understand the differences. And because you want to make sure that your clients understand the difference, because there are some gaps that work coverage present, right? And so one of the things that I do is, as we're going through it, if they tell me they have group and work policies, I say, okay, great. What kind of life insurance do you have? And they'll say, I got something through work. Most of the time, they have no idea how much they have. I ask them, have they seen a policy? 9 out of 10 times, they've never seen a policy. And so I say, okay, great. You have coverage through work. That's awesome. I'm glad to see you have something rather than nothing. Now I say, hey, Bob, do you know how group coverage works compared to private coverage? Almost everyone says no. So as a field underwriter, part of our job, what's really important, is to educate people. Because if you educate people properly, now they can make the best decision for themselves, and really at the end of the day, their family too. Right? And so what I do is I just say, okay, Bob, you have some group coverage. Let me help you understand how that works. So number 1, you're part of a group policy, which means number 1, you're not really the owner of the policy. The company's the owner, and you just get to participate in it while you're part of the group. And guess what determines while you're part of the group? Well, it's your employment. It's your employment status. And so while you're employed there, you get to be a part of the group, right? And it's kind of like using a company car, right? Bob, when you have a company car, if you have a job that gives you a company car, you get the keys, you get to drive the car, you take it while you're working there, whether you're at work or you're not at work. But then at the end of the day, if you ever quit, or you decide to move on, or the company decides to let you go, or
the company decides to cancel their...
That's the next one. The company decides to cancel their coverage, like some companies have recently done in the last 30 or so days, which you may have read about online. Well, if any of those things happen, Bob, well, now your family's exposed, and if God forbid something happens to you and now you don't have any coverage, your family's at risk. I'm sure you don't want that, right, Bob? Most people are going to say no, right? Yeah. And so it's really killing it off in the beginning and making sure that they understand the liability of just relying on group and work coverage, because at the end of the day, they're not the owners. They don't get to make a decision in it. They're just a part of the group, really, at the end of the day.
So true. It's so true. Big thing too about the group policy situation is that it's generally an active work benefit. And so I oftentimes will ask clients to say, you've got this group coverage. How long have you been at your job? 9 months. Or okay, where did you work before? Somewhere else. How long did you work there? 2 years. Okay, so Jim, it seems like you jump around a lot. So relying on this one policy that you have through this one job, you worked here for 9 months, for your little girls in the other room or your wife here who's sitting here, just isn't what most people do. See, I throw it in there? What most people do is they get a private policy. That's right. Something that they actually own, because if you don't own something private, you really don't own anything at all. A private policy. And so that's what we do here is we put private policies in place. Yeah. We educate our clients to not rely on that group work benefit. So excellent, Julius. All right, number 3 objection, and this one happens sometimes. Hey, Julius, I'm just going to save money instead of buy this policy. I'm just going to, it's $100 a month. Why don't I just save the money and put it in a bank account every single month? I'm just going to save it.
Yeah.
I don't, this doesn't make sense. I'm just going to save it.
Yeah. We have clients that say that to us, and they say, 13 to 15 years from now, I'll have the same amount of money that I would have had in a life insurance policy. That's kind of their math that they do. And really, when someone says that, it's really important to understand human behavior, right? And you got to look at their situation, number one. But if someone says to me, hey, I'm going to save money and I'm going to go that route instead. And then I say, okay, Jim, if you were to save $100 a month, how much would you have at the end of the year?
$1,200.
You'd have $1,200, right? Now, Jim, something happened to you a year from now. How much would you have for medical expenses or to leave for funeral costs or things like that?
$1,200.
Okay, so I'm sure you would agree if something happened to you a year from now, having a life insurance policy is going to be a lot more beneficial than having $1,200. Would you agree?
Well, nothing's happened to me yet.
You're right, Jim, but who knows what's going to happen to you tomorrow or a year from now?
That's right.
You don't have a crystal ball, I don't have a crystal ball.
Yeah.
The only person who really knows what's going to happen is the person upstairs, right?
Yeah.
And so is it fair to say that something can happen at any point in time after today?
Yeah.
Okay, so would you rather leave that in the fate of your savings account, which today you have X dollars in, and generally speaking, most Americans are not good savers. 1 out of 4 Americans don't have enough savings to last at least 6 months of their income.
Yeah.
Right? And so it's important, and Grady actually taught me this one, guys, is really most Americans don't have good savings habits, right? And if you talk to the client, one part of your financial inventory is going to be to find out how much they have liquid, right? And that'll tell you a lot about what that person does well or may not do well in the scenario of savings, right? And so it's really important to put it back on them. I recently had a client where we had a scenario like this where he wanted to save $100 a month. But then looking at his account, when I said that exact line, most people are not good savers. And looking at your situation, Jim, you're now 65 years old and you have $6,000 in your savings account. To think you're going to be able to save $15,000 over the next 20 years, or it was like 12 years actually, is probably not likely. Would you agree? And they recognize that because you put them in the realization that they had 65 years to save a whole bunch of money.
Correct.
And they only got $6,000 in the savings account. So it's making sure that they understand that, making a change in behavior when you haven't done something your entire life to now do it because you think or they think that that's going to be better than what we're offering is just not reality. And really at the end of the day, them saving for 13 to 15 years, could they have the same amount of money? They could, but there's also the chance that they die before then.
Correct.
Right? And when we're talking, depending on the type of product we're looking at, that's going to benefit them way more than them saving any amount of money that they're going to put in their bank account. And so it's just having them realize that there's 2 ways to look at this, but what we're really doing for them is putting them in the best position possible to transfer that risk. Because at the end of the day, if they're putting $100 in their savings account versus putting it into an insurance policy, they're taking the risk off of them and putting it on the company. Now, if something, God forbid, happens, their family's protected rather than having to pull out money out of their bank account.
Correct. I always like to say we're putting a guarantee in place.
Yeah.
Right, putting a guarantee in place. Now, I understand, Jim, you want to save. That's great intent. Now, like you said, you've had $6,000 that you've saved this year, and most Americans, Jim, honestly aren't great savers. Mm-hmm. So it's totally fine. But what most people do, see, I use that a lot.
Yeah,
what most people do is they put a small bill in place instead of forcing themselves to now save $100 every single month, and then if they don't do it, now they're creating guilt. So this is what most people do. They just put a small bill in place so that every single month they know that, wow, that $100 equals $15,000 for Mary.
Right.
That $100 equals $15,000 for Mary. And the big thing, too, is he's 65. By the time he's 66, 67, 68, insurance cost is going up, but he's locked in himself at a younger age, which allows him to save age, which protects himself. Because him thinking that, oh, well, now, if things get really bad, I'll just buy the coverage in 6 years. It's going to be double. Or it'll be up. It'll be up significantly more expensive.
It'll be a premium.
So that's a big thing. Is just kind of get them to understand, hey, let's put a small bill in place to remove that stress of having to discipline yourself, right?
Yep.
Just
100%.
do that. So, all right. So number 4 and last one, Julius, I've already got life insurance.
That's awesome. I'm really excited to hear that, Jim. Actually, you know what? As part of our producer's report, we actually need to see that just to make sure that we're getting the right coverage in place and we're not these insurance companies are not over-insuring you. Do me a favor. Go ahead and grab your policy so I can go ahead and look at the details.
I don't know where it is.
I wasn't expecting that one.
Okay. I don't know where it is. Well, no, sometimes
okay.
you tell them to call the carrier. We'll
call the carrier, right?
Call the carrier together.
Caught me off guard, but that was good. But yeah, we'll call the carrier. And the key is what you're trying to do here, guys, is you're trying to find the details of the plan out, right? Because you don't want to rely on the client's word.
I do know where it is now. Here it is. Okay.
Right.
Now, okay.
Either way, you're getting the details, right? Because the last thing you want is the client to tell you, I got, 500,000 in coverage and it's $10.
Oh yeah, I got 250,000, $18 a month.
Right.
I'm totally set, Julius.
Yeah. More often than not, it's not true. And even if it is, they probably just don't know the details of their policy. It could be an accidental. It could be some form of coverage
Increasing term.
Yeah,
Could
whatever.
have expired.
All the above.
Oh, I stopped paying on it. I have insurance.
Right.
I haven't paid on it in 6 years.
Exactly.
Well, when did you get it? 6.5 years ago. I stopped paying on it. They said that I was good.
Yeah, exactly.
We hear all the stuff.
So you're going to hear everything and anything in the field. The key is when you get the policy details, whether it's on paper or call the carrier directly, now you know what you're up against, right? And not necessarily up against, but what the client has.
Correct.
And before you're even thinking about replacing anything, it's important to break down what the client has, because many times, more often than not, you probably see this, the client doesn't know what they really have.
Correct.
They know a number or two, but they don't know the details. They don't know what changes, what stays in place, for how long it stays in place, and whatnot. So as field underwriters, we got to be the professionals to say, okay, Bob, Mary, or whoever you're dealing with, let's start off by helping you understand what's going on in your plan, right? So many times their premium is going to increase. Many times their coverage is going to expire. Just a bunch of variables.
They were approved for a policy that's a graded policy, and they're perfectly healthy, and they're paying triple the amount that they should be.
Exactly.
All kinds of factors.
Many factors, many scenarios, many variables. The key is, A, you got to pull it out and actually get the policy in your hand. B, review it and explain it to them, okay? Because an informed, educated client will make a good decision, right? And so once you can simply understand it, explain it to them, now you can understand if there's something that we can actually do to improve their situation. Because our key, what we're trying to do is when we're meeting with someone, is we want to leave them in a better situation than we found them,
Always.
right? Always. And so if our intent is that every single time, and we do it with professionalism and respect of our clients, we're going to come out ahead every time. And so you want to start by reviewing the policy, going through it, and then if we can put them in a better position, then we go through it with them. There's times where we can't replace the policy because they have great coverage.
Yeah.
And that's okay, guys.
But they were looking for more. That's why they filled out a request.
That's right.
They filled out a request, so they're probably most often looking for more. They're not looking for a review.
Right. And so it's really understanding what they have and then what the intent of the request was. And so many times when they have policy, like Grady mentioned, they may want more coverage. They may want something different. They may, whatever the case may be. But it's really important to really find out the details.
It's awesome. Yeah. So figure it out, review it, and oftentimes you can drastically improve their situation. I mean, I can't give specific stats, but generally, over 50% of the time, the clients don't have what they think they have. So always have them get the policy out. So those are the 4 most common objections that I think we encounter, how we overcome them as top producers here at Family First Life. And we're a leads-based company here with super high comps. So if you're in the industry and you're looking for a new home, you can click the link below or something, and we can get you a hold of Julius, get you a hold of myself. We'd love to work with you and see if we can put you in a better position. So with that, we'll talk to you real soon. Bye for now.
Bye-bye.